Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be taking a look at the brief USA and Iran conflict and how it played out in the market from the 3rd to the 9th of January 2020. In normal times, the biggest market movers are interest rates. However, when it comes to war conflicts, and especially when a leading country in the West is involved, nothing moves the markets more. Conflicts can cause immense uncertainty in the global economics, and that means one thing for investors: they will release cash by liquidating from investments such as stocks and put their money into safe haven assets such as the Japanese yen or Swiss franc. Although these two currencies return less to the investor due to the low interest rates, they are seen as a safe haven and steady long-term investments. Other safe haven investments at such times are gold and even Bitcoin in more recent times. Indeed, during this very short spat between the United States and Iran, from the 3rd of January, when President Donald Trump ordered an airstrike which killed an Iranian general after Iran fired missiles at air bases in Iraq housing US soldiers, we saw a downside move in the major stock indices across the globe, and especially because Donald Trump had threatened to target 52 sites of interest within Iran. While the world waited with bated breath, extreme market jitters ran throughout the global markets. The US dollar also declined initially. The oil market was affected during the initial phase because of the vast amount of oil passing through the Middle East region en route to the rest of the globe, which would have been heavily affected by war in the region, thus sending the price of the barrel of oil to fresh highs. This move adversely affected the Canadian dollar, which moved lower against the US dollar and other major currencies. Example A is of the Dow Jones 30 index, where we can see the market initially collapsed when Iran fired missiles at 2 US bases in Iraq. This threatened an escalation of war with the United States and Iran. However, because there was no collateral damage to American forces or their equipment, the Dow Jones has quickly erased losses and indeed has subsequently rallied to record highs. This lift has been followed by global indices generally. Example B shows a 1-hour chart of the Euro-USD pair during the conflict, which, although declined during this period, heavy losses for the euro were pretty much contained in a very narrow sideways range, and where the overall trend in the pair was lower prior to the event. Example C is the US dollar index, where we can see that after the initial slide where the Iranian general was killed and the retaliation by Iran was not effective, and the subsequent de-escalation of tensions between Iran and the United States, investors have favored the US dollar, which is broadly up against other major currencies. The yen also retraced its gains and the USD-JPY pair moved higher. This event goes to show that geopolitics is as important as fundamental analysis when it comes to trading currencies. New traders are strongly advised to learn how all the markets are interwoven and how they react when major events like war take place. If you enjoyed the video, then please like and subscribe, and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.